So this evening, Peloton released their earnings for Q2. That would be October to December of the technical year 2020, but it's their financial year of 2021. And to be honest, what's happening right now is a complete travesty because the share price has just dropped. And I mean, post-market at the moment, we're looking at an 8% drop in the share price. And to be completely honest, from looking at the numbers, looking at the shareholder letter, from listening to the actual webcast, I still can't actually see a decent reason on why this is dropping. Because to me, everything that I'm looking at is so positive for the future of this company. So I just want to go over all the different things that I'm seeing in this report. And if you're seeing the negative, if you're seeing something that's screaming out to you, please by all means comment in the section below and let me know exactly what it is, because there's definitely not anything that I can see that's really actually justifying the drop. Now, obviously, you could argue that the wait times for the bikes compared to competitors, maybe. You could argue maybe that the growth wasn't quite as much as they'd expected, maybe. But for me, it still doesn't justify it because there's still so much growth potential. There's so much good news here that, I mean, as far as I know, like the value of this company is going to be 5-6 times what it is now in the next few years. So definitely not any considerable bad news coming out of this report from what I can see. So let's just go over it then. So first of all, for the quarter, they've announced revenue of $1 billion. That's just for the quarter, $1 billion, which is up 128% on last year. Now, just to put that into perspective, obviously last year the sales was 466 million, yeah? But that was only up 77% on the previous year. So, obviously, global pandemic, we did expect to see some really great numbers. But when you consider, obviously, how fast this company was growing already and how much the global pandemic has really kind of boosted the sales here, and those numbers are even better when you go through and you realise that they've basically spent next to nothing really on marketing compared to what you would have expected for these numbers. So let's just have a look through other numbers. We've got the subscription revenue, which is 194 million, which is up 152% on last year. Now, obviously, on the surface, that's really great because you're looking at it and you're saying, well, that's up more than the revenue, so that just proves how good that number is. But really, we kind of expect that number to be absolutely huge based on the revenue. Because when you think, obviously, to maintain the consistent level, you don't need to sell any new subscriptions as such. You just want to keep your existing. Whereas obviously to match revenue from bike sales from the previous year, you need to sell that many bikes again. So the subscription revenue, if our revenue keeps growing, we should expect subscription revenue to grow on top of that as well. So although 152% growth is really, really great, we kind of expect it based on the revenue growth as it is. The gross profit is 424.8 million, which is 39.9% of revenue. And when we look at last year's, it was 197 million. So again, quite a considerable jump there. And that was 42.3% of gross margin. So obviously still significant growth in that regard. And another really great thing is not only are we looking at huge growth, but then you go to the total operating expenses, and we've gone from Q2 last year was 258 million in operating expenses. Now, bearing in mind, obviously, more than double growth, 128% growth, right? So 258 million was the operating expenses last year. This quarter, we're at 366 million. So nowhere near that double growth that you'd be expecting from the operating expenses. Sales and marketing went from 160 million last year to 177 million this year. So again, despite the fact that we've had 128% growth, we haven't brought that kind of same level of cost in advertising and marketing. Now, during the call, they did say that they would expect the advertising and marketing costs to start to go back up again. But at the moment, we're kind of benefiting from the fact that they don't need that extra cost at the moment. So now that the constraints of supply is being dealt with, and I'll go more into that in a minute, the fact that they'll still be saving a little bit more on advertising over the next quarter, but going forward, that's going to come back in again, which means obviously it's great that we get an extra lump of cash for now for further investment into the business. So as far as I can see, that's a good thing. So, and obviously looking at the very bottom line, last year the income was a loss of 55 million, and this year it's a profit of 63.6 million. So again, it's that whole part of the business kind of becoming very much like a viable business earlier this year when it started making a profit, and that's kind of continuing in now. So that's all good. And then looking at the forecasts, so when you look at last quarter, what they were projecting for the financial year of 2021, they were expecting, obviously, their revenues, they've forecasted that up. They've changed their estimate, moved that up a little bit. However, they have estimated their profit down very slightly. However, when you kind of calculate that through, that's expecting a gross profit this year. They were expecting their gross profit to be $1.599 billion. And with this change in estimate, although they've increased their estimated revenue up, with the percentage down slightly, which takes it down to 1.589 billion rather. So we're talking about a difference of $10 million in expected gross profit less this year than they were expecting last quarter. Now, I was talking about supply just a minute ago, and about the fact that the current restrictions on supply, obviously they had various issues with factories, manufacturing, and getting all of those products into the US and the UK, etc., through various issues with the freighting companies. Obviously caused by a multitude of issues, mostly around the global pandemic. Now, that's not changed, that's still happening. However, they have been working a lot on their supply constraints. Obviously, air freighting and moving the products in, paying extra to kind of expedite it through the process, that has cost the business a good chunk of cash. And they're still behind some competitors. However, that being said, because of the fact that they've managed to up their manufacturing capacity so much, I don't believe that this is going to be an issue for much longer. And I think those wait times really are going to start to come down by the end of this financial year. hopefully before, but I think we're gonna have to wait to see how that kind of pans out really over the next couple of quarters. That being said, just as an actual kind of numbers kind of factor, the amount that Peloton is able to produce of their bikes, the number of bikes that they're able to make in a month, it was actually the amount that they were able to produce in the entire year of 2018. So when you think of the number of bikes made for the whole year of 2018, they're now producing that in a month. That's the level of growth that this company has had so far, which is absolutely phenomenal. Going forward, we're now looking into the Tread, which has been released in the UK. It was released after this quarter finished, so there's no kind of physical results as far as the reports go for the Tread. However, what they did say is that it has exceeded their expectations, which is obviously good. They're also now, it's launched in the UK and they will be launching it very shortly in Canada. So it's definitely starting to gain some traction and doing very well. We're not expecting to see much movement on the actual bottom line of Peloton for their financial results for 2021 based on the Tread. So we're not really kind of expecting the numbers from the Tread to kind of impact the financials of the company for 2021 at all. We're not going to see anything there. So really, this is going to be more speculation on how we think the Tread is going to perform and where we think that's going to be within the wider business of Peloton over the next couple of years. And the way that Peloton is growing at the moment, the way that they are expanding their offerings, it's definitely looking very promising that the Tread is going to be a good income stream for Peloton in the future. When you look at the growth that they've got with the other classes that they're doing, so for example, they've got the yoga classes and they've got the strength classes that they do through the subscription model. Again, all of this is kind of building into the wider brand and providing more opportunities for the Peloton brand and the kind of facilities that they can produce. So it wouldn't surprise me if over the next sort of coming year, more fitness equipment will start to be released by Peloton as well. So there's a lot of potential that we could see coming out of this company over the next year. I think the next year is going to be a really exciting year for Peloton. So hold on to your hats. There's definitely going to be some volatility over the next couple of days with the share price. Not that there hasn't been for the last couple of days anyway. It's been madness. It's probably going to continue to be a bit madness. But like I say, as far as I'm concerned, from what I'm seeing from these numbers, what I believe is going to be coming out of the company, this share price is going to be rocketing in the short term and really rocketing in the long term. So that's my thoughts. Let me know what you think. Don't forget to like and subscribe to the video, and I'll see you in the next video. Thanks for watching.